down up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today.
Interesting, different, unique, innovative companies.
Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna.
The best trade idea resource out there.
Good afternoon, Zinger Nation. How are we doing? Producer AB here. We have a packed show today. As always, we got Frank Curzio, who is sponsoring this episode, coming up in a few minutes. After that, we have Dave Mazza coming on from Direction ETFs, one of our favorite ETF companies. And then after that, we have CEO Paul Rivera of ElectraMeccanica Vehicle Corp, ticker SOLO, Solo. Yeah. And I'm excited to have this packed show today.
What's up, man?
Luke,
I wouldn't leave you here by yourself. Don't worry.
Oh, it's okay. I was just going to say, Luke, who usually hosts this show with Jason, Luke is at the dentist right now. And I think he's a little bit scared of the dentist. So Jason went with him.
Jason, actually, I heard Jason's the one drilling into his teeth.
Yes, Luke's dentist needed help. So Jason, I'm getting zoomed in a little bit. We like that. Thank you, producer Rohan. All right, Spencer. Well, what have you been watching in the markets today?
Forget what I've been watching. Let's see what Frank has been watching. Frank, let's get Frank on here.
All right.
It has been a wild day. BTFD. Frank Curzio, talk to us a little bit about this. Hey. BTFD, right, Frank?
How's that? Did I hear that correctly? You said that Luke is at the dentist?
Yeah, we had to drag him to the dentist. He didn't want to leave work to go, but dental emergencies happen.
No days off on Wall Street, no excuses. And I'm making fun of him because he was actually on my podcast, which published yesterday, Wall Street Unplugged, and he came up with some really good ideas, and we had a great conversation. It's really, really cool. So it's fun. Wait, he didn't tell me he had a dentist appointment.
Did I hear that you haven't missed a week in 10 years, Frank? Did I hear that?
I've been doing a podcast for 14 years. I would say, I really don't remember. At least the last 8-9 years at least, but I think maybe one or two, but I can't remember those. But yeah, yeah.
So 52 weeks a year for 14 years?
I know. It's pathetic, right?
You said it, not me.
You know what it is? It's the reason why we've been doing this for so long, doing the podcast so long, is it's like a TV show, right? And a lot of people who do podcasts, they get excited and they get crazy and they do it. And then they're like, I don't know if I want to do it a couple of weeks. Once you stop, you're done. Because nobody's going to come back. And I've always realized that. I tell everybody that, and people still start the podcast and think, I'm going to do it once a month. You got to get it out there. You got to keep doing it. It's like a TV show, and you get people excited. If it's not there next week, they're not going to come the following week. So, I've been pretty dedicated. So,
I know you're like the Iron Man of stock market podcast. But enough about that. Let's talk about the market here, Frank. There is in our morning show this morning in the chat. There was a lot of people were feeling a lot of emotions. People were pretty upset, fired up about the market being suddenly down overnight. We are way less down now than we were a couple of hours ago. Let's just start. We'll back up. We'll talk about overnight. What do you make of that? If you want to call it a sell-off, a 1.3% sell-off in the overall market. What do you make of that? Why it could have happened, and then we'll get into what's happened since.
It's kind of funny how we're conditioned for having a bull market such a long time that we have a day that's down 0.8%. Everybody's going, it's crazy, right? It just shows you how sentiment is now. I think most of it's all BS. I'm going to be honest with you. It's a good opportunity to buy some really, really good stocks. We see this a lot hit with Tokyo and the Olympics. And there's a lot of BS about the Delta strain going on. I'm someone that covered COVID extensively, got on board very, very early. Have lots of great doctors that have spoken to me, interviewing people on lockdown early in China and in Italy. So very, very familiar with this. And when you look at Delta, first of all, the current vaccines protect against it. 3.2 to 3.3 billion people had the vaccine. Yeah. And Japan came out and said, well, we're not going to have any expectations because we think it could result in the possibility of spreading. And just to put that out there, Japan, 1,600 cases per day they're seeing. That's based on their population. 1,600. If you look at their population, the UK has 30% of the population, and they're seeing 24,000 cases per day. So just to put things in perspective of the news, yes, it sucks that people's parents aren't going to be able to go and watch them in the Olympics. It's going to really be bad for Tokyo because they're going to lose a lot of money. But at the end of the day, we're reopening. And you're going to see names get hit because of this. And I think it's an opportunity to buy quality names like Delta. I know it's or any airline. They're pushing lower. If you look at the airlines and look at Delta in particular, and this was when right before COVID, they were firing on all cylinders. Stock was a little over 60. It's like, low 40s today. So it's one of the few areas, especially the reopened trades, that haven't gone back to their highs. And it was at 50. It's come back down about 20%. They're going to see massive orders. Anyone that's flying could see it. They have the international exposure, and internationals, again, we're worried a little bit. Maybe the global growth's not going to be there because we have the Tokyo news overnight. But to me, that's BS. It's going to open. Maybe it takes an extra month or two, a couple of months by next quarter. But once it does, these guys are going to see profits beyond belief. You're not even going to be able to get on a plane because people are still looking to get out there. That and another one because of this that sold off a little bit. Hotels in the U.S. like Red Rock Resorts is one that's kind of under the radar. If you look at that chart, we've been in it for a while. It's a great name. It has off-strip casinos in Vegas, and these guys have done a fantastic job opening everything up, generating lots of money, doing great, and that pulled back about 10%. I think those are two names to buy. So when you look at news, guys, try not to. You want to analyze this stuff yourself and look at the facts and the details. I mean, some people are going to disagree publicly or based on their politics about COVID. Look, you want to look at the news, see if it's BS or not. This is kind of BS, and it gives you an opportunity to buy because at the end of the day, we want to make money.
Well, if we're talking about Tokyo and Japan and implications of that, who's probably having not a good day are the executives at NBC, because we know there is a direct correlation between lack of fans and lack of viewers. So we have precedent for this. It wouldn't surprise me for a second if in a month or two we get a lot of headlines. Oh, viewership down, viewership way lower than expected.
Yeah.
Comcast is obviously a huge behemoth. They have way more than just NBC going on. They got cable, all that stuff. But if you're talking about just headlines and that sort of thing and the implications of Japan specifically, we know that lack of fans equates to lack of viewers. So it wouldn't shock me for a second if we see that headline. Just trying to
that's great with those stats.
Read into the tea leaves a little bit, right?
Yeah, I mean, being a sports fan, it was hard to even watch NBA when it first opened when you have no fans. They have the fake crowds there. It's true. That's the buildup, right? That's what you like. You love seeing the crowd, whether it's against your team or for the team. It's just that's a big deal. And I wonder if they're even going to do the opening ceremony so everybody walks in, which is a big deal. And you have all the countries watching. What are we going to have? Half the people there, masks. It's just a terrible experience. All for something where I'm sure most of these athletes are vaccinated. And if they're not, they are not at risk at all because most of them are very, very good shape. And if they do have underlying risk, then, they've gotten the vaccine. So it's kind of a joke to me.
Okay. So as far as the overall market, though, it's easier to say now by the dip because we've regained a bunch of the losses from overnight. But this morning, and when you're in the moment, it's hard to be, it's hard to look at a market down 1.5% overnight when we haven't really had any sell-off like that yet this year. And I can understand the fear a little bit. I mean, look at that daily candle on the SPY from today, right? You can understand it, right? So you're saying you're coming in here and just blindly buying the dip, or are there other things you're looking at? Because it's easier said than done. It's not that easy.
To me, it is a little bit easy. I mean, what are we off of our highs? I mean, we're just near all-time highs, right? So we're off only a little bit here. But you're never going to time the market perfect or buy at the absolute low and be able to sell it at the absolute high. No one tells you that is full of shit. So what you want to do here is look at the long-term outlook. Everything is going to continue to open. I gave reasons for airlines, and maybe it comes down at 39, 38. But, one thing that you want to do, because I don't care how great of an investor you are, I don't care who you are, there's always emotions involved. If you don't have emotions, it's insane, right? People say, well, we'll use technical analysis. You use technical analysis, you buy a stock, goes down tremendously right near your stop. Emotions come in and, hey, maybe pushed it a little bit lower before we stop out or whatever. you got to take the emotions out. So how do you do that? Take smaller positions. Don't go all in. You don't know what's going to happen tomorrow. I don't know what's going to happen next month. I really don't. But I have a pretty good feeling over the next 4 or 5 months, the global economy is really going to open up, and we're going to see massive, massive demand, which we're already seeing. I mean, and not only are we seeing massive demand, we're seeing, United Airlines buy more planes, right? So good for Boeing, good for suppliers. We're seeing all the trends that make sense. And the vaccine's being rolled out across the world, right? It's been out there anyone could get it. Anyone who wants a vaccine could get it, almost any country. Almost. There's some countries, of course, that wherever. Sure. But we're going to open, and that's how I look at it, where, if you're looking for a trade and do it, if you're looking for a trade, buy overstock. I mean, there's lots of options out there that they're buying. It just came up on my systems. So, they're buying, I think, the 90 calls or something like that. But there's
of overstock.
Of overstock. I mean, if you're
OSTK.
Yes, if you're looking for a quick trade and things like that. But for me, I look at like a 3-6 month outlook, and the catalysts, are they going to trigger in, over that time period? And I'll push it out a little bit. But say if, the market comes down another 1% or 2%, you want to have money on the sidelines. That's how you become rich. That's what the great investors do. They buy when things are down, and they sell when things are high. So if you're taking it, say if you're going to buy a full position and you buy a third position instead in Delta, and I'm wrong, and it comes down a little bit, then you almost want it to come down. You're going to lower your cost basis. Then, you buy a little bit more, right? So I know technical analysis, don't ever buy when you're down. I'm just saying this has worked for me for 25 years, where I have a thesis. I have a longer term thesis than most traders. And my thesis is, GDP growth is going to be incredible. We're going to see earnings growth. It's going to be incredible for most sectors. Yeah. And more people are going to be traveling like crazy, and that's going to be very, very good for the airlines. And they're still well off their COVID highs. And you can't say that for a lot of stocks, especially the reopen trades.
What do you say to the people that are like, so the overall market is not far off all-time highs, but there are people that are in stocks like AMC, which is, I know it had a green candle today, but AMC, Tesla, people that are well underwater in these things, right? And stocks that were in favor and are now just massively out of favor here. What do you say to those people right now?
I'm going to look at the chart of AMC because I haven't looked where it's trading. But
it's up about 5-6% today right now.
Okay, so it's down basically 47. I just want to see this right here.
Yeah. It's having a good day.
I mean, underwater, they would have to, you can't really say anything for AMC because, to buy a company like AMC, just to put in perspective, you look at AMC, and I did some analysis on this, so sorry if it's around these numbers, but it's 11 billion in 2018, 11 billion in sales. They had 11 billion in total box office receipts. That was a record. And this company had a market cap that was about 20x lower than it is today. Just to show you. So you're buying this stock right now. You're going to get what you deserve, right? I mean, and hey, you're going to buy it and it's going to go up, and you had the Reddit crowd, but just know that we're up to $1 billion, just past $1 billion in box office receipts. Maybe we get to $3 billion, $3.5 billion by the end of this year. But remember, when we were $11.5 billion, this company's market cap was probably about 85, 90% lower than it is today. So a lot of expectations are built in. So if you ask me, what should they do when they're underwater? If you're buying this stock, anyone buying AMC, GameStop, I mean, look, I hope you made a ton of money. I hope everybody makes a ton of money. But if you're buying these stocks, you have to look at it where I'm risking like at least 60, 70% of my capital to generate 200, 300, 400% returns. That's how you have to look at it. And so you should be expecting these pullbacks. So, I mean, I'm not going to tell you to buy AMC here because, again, it's not trading on fundamentals. It's not even trading on technicals. It's just trading on whether, who's going to buy. The Wall Street bets crowd is now 10 million plus. I mean, this is a serious group that put Melvin Capital back practically out of business, right? Which is a $12 billion fund that needed, to be recapitalized. So for the AMCs, and what do I tell those people? Listen, you're taking on that risk. You should expect this. And most of those people like to hold these stocks, right? They're hodlers, and you hear that. Even the early GameStoppers and the AMCs, those two stocks, well, I don't think that they're going to sell those. Even no matter what they hear from someone like me, they're not going to sell, I don't think.
Yeah. And so Frank, you mentioned too, that you expect the global economy to grow over the next, 3-6 months. Do you expect proportionally the US economy to grow, at a faster rate than other countries, or do you think it'll all kind of be similar?
Well, we're all open now, right? Basically every state's basically open. They tried to keep us closed. They did everything that they can, but now we're open. So we're going to grow a lot faster than everybody else. I think we handle it in some areas much, much better. I mean, I live in Florida. I handle it great. I kept the economy open. Our numbers are the same. every place else. And, schools were open. Everything was great. When I look globally, I mean, Japan, very surprised at that news. So that's why you're seeing a setback, and you should. But the bigger thing is the global trade, right? Holy cow. I just read a report from Citi. I mean, it's going to last a lot longer than what people are saying. And companies aren't reporting this. They're not really reporting this. And there's a lot of companies getting affected because the price is up tremendously. It's at 100% capacity. We're looking at double to triple amount of time. If it takes 30 days for that US-China, it's taken like 75 days. And it hasn't eased up. It's going to go into next year. And when it goes into next year, what does that put into play, which no one's talking about because it's July, is the holiday season, which is the biggest season for all companies. That's one of the biggest worries I have. I just went car shopping, and I could tell you that if you're going to buy a car with your specs, I'm talking about just your color, where they have to build it, you're not getting it for 9 months, at least 9 months. They're going to tell you 4 to 6, maybe. It's going to be 9 months. I ordered a mattress 3 months ago. I just got off the phone with them. They still don't know when it's coming. 3 months. They said it was going to come in 8 weeks. So everything's really delayed, and you're looking at globally, it's going to take some time. But like I said earlier, it is going to open up eventually. And a lot of these countries are opening up, whether it's, around Europe. Europe's starting to open up a lot. So globally, I'd stick to U.S. companies right now. I think U.S. is going to do fine. You're going to see huge GDP growth, and you've seen it out of the U.K. You've seen it out of a lot of the EU. So you will see strong growth in some areas, and maybe, it'll take a little bit longer in other areas like Japan.
Yeah, I think right now the United States, we have some strong vaccine numbers relative to other countries. So it'll be interesting to see if that relates to a faster GDP growth here than in other countries overseas. Mm-hmm. All right, Frank. Well, thank you for joining us today. We appreciate it. Frank and his podcast, Wall Street Unplugged, is the sponsor of today's episode. And Frank, you just dropped an episode with our very own Luke Jacobi. So I will drop that link in the chat. And if you guys want to go check it out, subscribe to Frank's podcast, leave a review. He says Luke was great. I'll have to go listen to it to see. It's
not because I have to say Luke's great, because I'm kind of on his show. He was good. He gave 3 great ideas, and you can also find that WSUpodcast.com is even a quicker way. So it was very good, and 3 really cool ideas. So I had a lot of fun with Luke, and I think you enjoyed it. So it was definitely a good podcast.
Thanks a lot, Frank.
Awesome. Right. Thank you for coming on. We'll see you next Thursday.
All right. Take care.
All right, we got our next guest waiting. We should bring him on. Dave Mazza is the managing director and head of product at Direction. Dave Mazza, how we doing? Good afternoon.
Doing well. Happy to be here.
Let me bring up a table here of some Direction funds. Looking over the last week.
Spencer, we're here to talk about the cannabis ETF. Correct, Dave?
We don't have cannabis in the lineup yet.
Working on it though.
Always working on new ideas.
Direction, you guys, whenever you guys drop a filing, and so you guys are like ahead of the filing trend. I feel like you guys are always the first one on whenever there's a new theme, you've always got the filing right there, ready to go. I've got a table up here of Direction's ETFs, looking over the last week just to get an idea of what's working out there, what's not working. Obviously, the Yang is your top performer, the bearish China fund. No real surprise to see that up top. Dave, what trends jump out to you right now?
Well, you hit the nail on the head. Certainly, we know that there's this confluence of events impacting markets right now. We saw, all-time highs being hit on 7-8 days across the board, and then now we see what's happening with the 10-year, and everyone's freaking out, even though the S&P 500 still, 13.5%, 14%, depending upon the tick. What we're certainly seeing, though, is activity in our funds has increased markedly. So anytime there's volatility, volume goes up in the leveraged and inverse ETFs. This China move, I think, is underpinning a lot of what we're seeing. And what I mean by that is everyone, of course, is focused on inflation, focused on the Fed, but it's always these kind of cracks in the system. And many people weren't expecting, of course, an IPO with such fanfare to then come down as hard as it did because of the crackdown on the cyber side. And of course, that means that people are taking the bearish bet on China-related names.
Yeah, actually, that's a good point. Let's zoom out for a minute here, and you were talking about overall volume in your funds being up. I kept saying it felt like for the past couple of days at least we were in like the summer doldrums. It was quiet. We're in between earnings season. We got through a Fed meeting, and there wasn't really that much going on. Today obviously is a bit of a different story, but like overall, based on trading activity in your funds, as you just said, it tends to go up when there's volatility. What have the past few weeks shown you? Because it felt quiet to me.
It definitely had came back down to earth. What we usually earnings season is one of the times where we see most activity in our leveraged inverse ETFs, really for two reasons. Folks taking bullish bets over the short term on banks coming next week, or semiconductors starting on the 19th, or people using the 3X funds as a very, very short-term hedge. Let's say you have a lot of exposure to financials right now. Certainly been a tough couple of weeks for you, or you have a lot of exposure to semis. They've done great. You don't want to sell those winners. You want to use a short-term hedge in case something turns against you when some of those names report. That's how we see the usage. So the periods prior to that, I should say, were consistent. The one area that we continue to see activity, really through positive and negative returns, had been on the semi side. So what I have been saying is that, we know that most market strategists were out there, calling maybe correctly that growth was going to come back down to earth and value would do well. Traders continued to focus on the bull side of semi. So taking SOX L over SOX S. I've said this nearly every opportunity to any folks who will listen. When that changes, that would tell me a lot about the market, but people kept buying the dips essentially. That I thought was a really interesting theme. That was the one area that we saw a lot of activity, even as some of the other parts of the suite came back down.
Very interesting. So what you're saying there is that people were taking the XL over the XS, the bullish over the bearish, or has that turned?
It turned a little bit yesterday, to be quite honest, but one day doesn't necessarily make a trend.
Yeah.
So basically, even if you were when you were doing well, money kept pouring into the bull side. When you were doing even on days where traders maybe have taken a hit, they just stuck with it and actually bought more of it. It's very rare for us to see that with the pairs. Again, most people will use one over another depending upon what's happening. The other area that we saw this continue to see activity, we have they're a bit lesser known, but it's HIBL and HIBS. What this is leverage exposure to the 100 highest beta stocks in the S&P 500 on every month. So the actual portfolio changes.
Okay.
With that. That's an area, again, right now you're going to see a lot of the airlines, a lot of the energy stocks in there. That's an area where people kept taking the bullish side. Again, much smaller than, of course, our semiconductors ETF, but an interesting area that we're starting to see a lot of activity.
What about energy here? It's sort of been, it's been strong. It's been strong. I'm curious what you've seen. You guys have a few energy funds as well. What are you seeing on that front?
Yeah, so Gush and Drip are kind of our oil and gas plays, a little bit narrower than ERX or the broader just kind of S&P energy sector.
Yeah,
that's an area that obviously, look at the chart right there. As oil prices continue to go up, people were calling for $100 barrel of oil. We saw the energy stocks do consistently well. What's interesting, look at some of the gaps down though over the last few days. I think the tell on the market is really what happens to the dollar, what happens to rates, and then what's happening to oil and the commodity space. And if these charts don't hold their averages or their prices of support, I think this comes back down to earth really, really sharply, even though energy is actually a relative outperformer today in some ways. I would keep an eye on this again if you're actually looking for this to be a tell of more of a kind of macro point of view as opposed to just what's going on in the energy space. But really, Gush and Drip, again, two areas that have Gush is the bull side, Drip is the bear side. Significant activity the last couple of weeks.
You're talking with clients all the time, right? So money managers, advisors. What is the tone? What is the sentiment in those conversations? Obviously, that they're talking to you about how to incorporate your funds into their strategies and so forth. But what is the feeling? Are they mostly asking you about, the bull side, the bear side. Obviously, you have to be nimble to use these products in the first place. But what is the tone on these calls?
I'd say, yeah, great point. You have to, anyone who's looking at these products, you have to be prepared to monitor them on a highly frequent basis. They're not intended to be long-term holdings. Look at that drip chart, right? Basically has continued to go down consistently,
Right.
because you compare that to the best chart. However, what I think is really interesting, if you look at the ratio of our assets, so if I combine all of our bull funds relative to our bear funds, it's never been greater. So meaning there's that much more money on a daily basis being put to work on the bullish side versus the bearish side. So this tells me at the highest level, sentiment remains really bullish. We continue to see buy the dip mentalities because frankly, even the corrections, if you want to call them that, have been short-lived. I do think we find ourselves in an environment that we probably remain in kind of a buy the dip mentality for the rest of 2021. As we get to 2022 and we get through, again, kind of these earnings seasons that are going to see tremendous numbers, it's going to be really hard for companies to continue to put up the numbers that they're seeing. I think this is going to be another great earnings season. 2022 is where the murkiness happens for me. And that's actually, why I'm beginning to look out at some of these kind of micro indicators to see if anything's breaking there. But frankly, today is, I think, a confusion in the market because, frankly, people were loving the lower rates. Now they've gotten almost too low, breaking that 1.25 handle in the 10-year. So sentiment broadly remains bullish. I would say no one's really asking us too much about the bear side or the hedge side yet. Of course, that could change going forward.
Okay, on the non-leveraged front, you guys have a couple of thematic ETFs that perfectly encapsulated the trend of the last year. You have the Moonshot, and then you have the WFH, right? The work from home ETFs. Very interesting divergence. I know they have different exposures. But can you talk about that? Because the work from home is, the chart speaks for itself, and the Moonshot, that one speaks for itself too, right? So you've seen this divergence in those two. What do you make of that?
Yeah, here's what's really interesting. So we had that work from home chart up there, right?
Yeah,
work from home just celebrated its 1-year anniversary last Friday. So we launched it on June 25th, 2020.
Yeah.
If you were to go back through Twitter, everyone's saying top of the market for remote work, economy's reopening, right? Guess what? They were right. Vaccines rolled out, economies improved, certainly airline stocks rebounded, but all along the way, what continued to do well? Remote work stocks, because really what they're doing is empowering the future of work. You don't necessarily need to have an economy 100% shut down or 100% reopened for the names in this. If names like 8x8 and Zoom, and even Google on the cloud side, Fortinet, CrowdStrike to continue to do well. So this fund has vastly outperformed the broader market. I think it continues to set up, breaking some resistance levels, which is really positive. So even if you believe in the reopening thesis, the names in this portfolio, it being concentrated with 40 stocks, can continue to do well. So I actually think that we're actually setting up potentially for a longer run outperformance in remote work. Moon, a bit of a different story to your point. Came out of the gates really strong when we launched it in November. We just had a rebalance of the portfolio though. A reconstitution. So once a year, we go through and re-identify the names that are based off of our methodology, which again, focus on early stage innovation. So these are really mostly, we'll kick out companies that are large caps. We'll kick up companies that aren't spending on research and development relative to sales. And Moon's basket, from a thematic perspective, saw a decrease in the genetic engineering and cybersecurity names, a big increase in autonomous and electronic vehicles. So CRISPR was added to the portfolio, but also a name like Nikola, RMO, Solo were added. They were not there before. And we sold out of some of the other names that saw a significant run up. So I think Moon will be very dependent upon the environment for growth, for people to begin to pay up for growth. It's kind of, again, probably testing some of its support levels that we had seen before. If it holds those, I think that's very telling that the momentum for these type of small cap growth companies can continue to do well.
All right, Dave Mazza is the managing director and head of product at Direction ETFs. Joining the show periodically, dropping some knowledge. Dave, we appreciate the time. Thanks a lot. We'll talk to you again soon.
Thank you. Talk soon.
All right. Let's get that moon chart off there. Let's go to our next guest. The show is moving. We are moving quick today, guys. Luke is at the dentist. Jason's the one doing the drilling. It's a whole thing. I don't want to get into it now. Let's bring on our next guest. We do have Paul Rivera, the CEO of ElectraMeccanica, here in the waiting room. I'm going to bring him on. Ticker SOLO. Paul, good afternoon, good morning, good evening, wherever in the world you are. How's it going today?
I'm doing great, Spencer. How you doing?
We're doing great. We are doing great. We've got some excited people in the chat waiting to hear from you. A lot of people are looking forward to this interview. So you and I spoke it was about 11 months ago, and a lot's happened since then at a high level. Give us an update. What has happened since then?
Oh, man, you're right. A lot has happened in that period of time, right? So I guess going backwards, the biggest thing that's happened is we've broken ground in our facility here in Mesa, Arizona. So that's probably the biggest piece of news, right? So as you know, we were looking for a long time for a site to have a U.S. assembly operation and engineering technical center. And it took us a long time, right? We started by looking at 7 states and 7 potential candidates and got it down to between Tennessee and Nashville area of Tennessee, and then the Phoenix and Mesa area of Arizona. And we ultimately decided on Mesa, Arizona. We're really excited that we did that. And they just made an offer that was really, really compelling for us. And so we broke ground last month here. And that's really, really key for us, because now it puts us into position to provide a made in the U.S. product, gives us globally supported, logistics and supply chain. It puts us near our target market, which is on the West Coast. So we're off and running. It'll take 14 months to build our plant here, but that's just really exciting for us. And we're now hiring locally talented engineers, and that's big news for us here.
What exactly was so difficult about finding a location?
Well, I mean, especially when it got down to Nashville and Mesa, there was a lot of things that were challenging about those 2 specific locations, because, as you know, Nashville is an automotive hub, right? And there's a lot of good reasons why somebody would choose Nashville. There's a lot of supply chain there. There's an automotive industry that's already there. But let's be honest, also, when it came to Arizona, Arizona has a great emerging EV and tech space. And Sandra Watson and the Arizona Commerce Authority and Governor Ducey have done a great job attracting jobs and talent here. And they're bringing companies like Intel, Taiwan Semiconductors here, and they're bringing other companies like, Waymo and Blink here. And, it was just, for us, at the end of the day, this made more sense for us. So a compelling piece of land, a compelling overall offer for us. It was closer to the West Coast, and that's our target market at the beginning here, being near Los Angeles and near San Francisco and California and Oregon and Washington, all key markets for us. And, our home base is in Vancouver, right? So just overall, this was a much better spot for us.
Okay, so we've got a site, and as far as getting down the line into production, someone in the chat asked, Mario asked, hoping you can drop some great news about the Solo. Where are we as far as next steps, though?
Now, remember, so this site is for U.S. production. It's 14 months down the road. I don't want people to forget, we already have one facility, and it's in Chongqing, China. Right. And so we're already up and running at that facility. And over the last 10, 11 months, we have been producing the vehicle, and we've opened now nearly 20 retail locations in 5 Western states, in 10 metropolitan markets. We've started to really show the vehicle now. We've conducted countless test drives. We're putting the vehicle out there and starting to build awareness. We're showing the vehicle to not only retail customers and to fleet customers as well, right? We're really starting to build out and show our ecosystem. And there's really 3 prongs to the ecosystem, which is, one is the direct to consumer model. And the second one is all about the fleet side, the commercial and fleet side, which we've talked a lot about. The fact that this vehicle, you take that hatchback off and you put a cargo box on the back of that vehicle, and it's the perfect vehicle for everything from fast food franchise delivery and pizza delivery and doing things like security companies and tech repair. That's what this vehicle is going to be really well known for. And then the last part of the ecosystem is the idea that you could share this vehicle, right? The idea that you walk up and with your iPhone or with your Android device, you could take it off of an EV infrastructure and you could take it for 2 hours or you could take it for 4 hours, especially in high-rise residential complexes or in college campuses, and share it. That's what makes this vehicle and this company unique and different than any other company. And so over the last 10 to 11 months, Spencer, that's what we've been doing, right? And we've been just working out and doing fine tuning and tweaks so that we're getting ready to put the vehicle in the hands of customers. And we'll do that starting with our plant in China. So we'll start to deliver to retail customers from our plant in China first while we're bringing the US plant online.
So as far as those retail locations, I know you're in Mission Viejo, you're in Seattle, you're in Sacramento, Portland. I know there's more I'm not naming, but
Seattle, Denver, Colorado. We just opened up Denver recently. We're in Scottsdale and Chandler. We're coming out all over the western part of the United States now and starting to really build awareness.
Can you give us some sort of insight as far as what has demand been like at those locations?
Yeah, I mean, it's been very, very interesting because at the beginning, remember, these retail locations were during COVID, right? So it was a real challenge because we were fighting COVID and opening up retail locations during restrictions and during a restricted flow of traffic in malls, especially in California, which was a real tough situation. Now, as things started to really open up, now the flow has really increased and the interest has really started to ramp up. Now, the other thing that's changed too is we've gone from moving ride and drive events to starting to populate our retail locations with test drive vehicles themselves, right? So locations in Southern California now have vehicles where you can go and actually test drive, and those are more permanent vehicles that are there for test drives. So the demand has been quite interesting. It's been ramping up, and that's on the direct-to-consumer side. Now, the other thing that's been really interesting is our fleet and commercial demand has really ramped up. And now that's not direct to consumer. On that side, we have built a fleet department, and we're aggressively going after those companies that get it, right? This vehicle's perfect for 100-mile urban driving range, top speed of 80 miles per hour. And if you think about it, how many times do you see in urban environments fleets where there's just one person in the vehicle, especially when you talk about to pizza delivery or fast food franchise prescriptions and things like that?
Sure. Yeah. And I was going to ask you, you talked about all the use cases, whether it's delivery, carpoolings, whatever. What kind of conversations are you having on the B2B side? And do we have any firm, contracts or what?
Yeah. So we're down all the way down to talking with companies that are small municipalities on one side, right down to parking enforcement and down to talking about pool vehicles with small municipalities and towns, all the way to dealing with some large nationally known fleets on the other side. Each of these fleets wants something unique in the vehicle, right? Once you take off the hatchback and put on the uniquely styled cargo cap in there, then they also want things like forward-looking cameras, or they want anti-theft protection, or they want, in the case of fast food delivery, maybe some heated compartments in the back, or the ability to tie into their kitchen management services or delivery management services. Yeah. And the vehicle has some pretty sophisticated telematics already, so it's not hard for us to do that. So we are having a lot of conversations with a plethora of fleets across everything from small, very, very small municipalities all the way to nationally known fleets.
Is there the potential down the road though for partnerships with company? I don't know, like Uber for example, or Domino's or whatever.
Yes, I do see that, and but I'm also realist in the sense that what I see happening, Spencer, if I'm honest, is I see that some of these fleets are going to want to test the vehicles first and build use cases out of the vehicles first, build some modeling from our numbers first, right? From a number of these vehicles first, drive the vehicles around first, and then what I think they'll want to do is they'll place orders based on the next evolution of the vehicle, because they want a say in what that evolution of the vehicle is going to be, right? They want the opportunity to really give some input into the next vehicle, and the next vehicle's already being designed, right? Because it takes a while to design a vehicle. And even though we're putting this one on the road today, the next evolution of the vehicle, which is planned for late 23, early 24, is already in the works and being designed. And fleets are already talking to us about, well, can you have more cargo space? Yeah, it can be slightly longer. Can you have these additional features in it? So I already see where this is headed.
Question from Ben in our chat here. Can you share, do you have a timeline on when you will actually have vehicles in customers' hands?
Yeah, I think that it's imminent, and I know people get frustrated with me, but here's the reality, and this is what I've said all along. We don't have the luxury of being a General Motors or being a Ford or one of these larger companies that have had, X many vehicles before and many years of doing this before, right? So we get only one chance the first time to make a really good first impression. And when you're building a vehicle the first time, the engineering the first time, you have to get it right. And then also when you're putting brick and mortar in place, as we are, and when you're building customer service, and when you're making sure that the after sales is going to be handled the right way, all of that's got to be planned the right way. And I've been around this business for more than 30 years, and I've seen what's worked and what hasn't. And so everything from just making sure that when we hand those keys over the first time, that the vehicles not only perform, but we can handle the customer care afterwards is important to me. And I know that drives people crazy, that I'm careful about it, I'm calculating, and that we're being very careful as a company, but we want to make sure we get it right. But it is very close. We're very, very close, because you can see we're executing against the plan. We said we put them in retail kiosks first, which we've done, and then do fleet demonstrations, which we've done. Now we're actually starting to put them in permanent test drives, which we're now doing. So you can see that it's very close to being into the hands of customers now.
Yeah, I think people want specificity, which you're not always able to provide.
Yeah, it's tough. It's tough because we also have some things against us. Being very honest, for the investors that are on the call, being very honest, there are some things that are out of our control. For example, there have been the silicon chip problem that was out of our control. I'll tell you that another problem that's been out of our control is the logistics nightmare coming out of China right now with COVID shutdowns at the ports in China, right? That are not in our control. So there are things that are also outside of our control. So we have our own internal, milestones and hurdles that we're going over. And then on top of it, we've got some things that are out of our control that we're battling as well.
As far as the chip shortage, can you speak a little bit about how specifically that has impacted you as far as delays and if you have specific numbers as far as how it's delayed you guys, or increase your costs or whatever?
Yeah, well, I think costs are going up in the automotive industry all around anyway. But more specifically about how it affects even a company like ours, it's just interesting that you don't realize how many human interfaces involve those chips, right? Everything from the radio that's in the vehicle to the navigation, to the radio that's in the vehicle, to the instrument cluster that's in the vehicle. All of these things require those chips, right? So even though we're a much smaller player with smaller volumes, it does still affect us. And as you can imagine, the larger companies that are pushing those very same suppliers are putting demands on those suppliers to suit those needs first, right? So we're pushing as well, and we're in line, and we're doing the best we can to assure that we still get our needs met as well.
Wait, I'm just curious. You guys do produce cars in China right now. With what we've seen in the past couple of days and weeks, with them cracking down on companies like Didi, companies that listed on U.S. exchanges, it seemed like for a minute there, U.S.-China tensions were on the back burner. Maybe, as they step up their regulation efforts, things get a little bit hotter on that front. Do you have any concerns about that as far as how those geopolitical tensions could impact you guys and your production timelines?
I'm not too concerned right now. I think that we're covered for the volumes that we're talking. Because remember, I've always said that in our case, we're in a situation right now where we've got a great subcontractor. Our volumes, I don't think we're going to be impacted over the next year and a half to 2 years, and we're building a facility in Mesa, Arizona. And I've always said that the reason why we're going to put that facility in Mesa was to mitigate against the risks of China and against the tariffs and things like that, on top of a number of other issues and taking advantage of a U.S. talent pool and a global supply chain and all these other things and having a made in USA product. But I'm not really worried right now. I have to be honest with you. I think that we're positioned well. We have not heard from our partner any concerns whatsoever. My biggest push right now is just getting those vehicles across the pond more expediently and being able to start to deliver into the hands of customers.
And then just one more for you. Have you heard from investors, about just, and this isn't related to you guys specifically, but, EV stocks, all these new car companies were massively in favor for a while. They became out of favor now. Have you heard from investors, sort of, not that you can control your stock price, but have you heard about, can you guys hurry up or whatever? Because a lot of people got caught up in this frenzy last year, and maybe are paying the price a little bit now. It's across the board here, not just specifically to you. But have you heard about frustration from the investors side of things?
I think that as a CEO, you always bear the brunt, and you can appreciate that, Spencer, right? As the CEO of an EV company, probably any company, when the stock is up, you're always in good favor, and when it's down, you always get the calls, right? Yeah. But as a whole, the industry, as you point out, has been through its ups and downs over the last year. I will say this. I will say that the whole world is still moving and marching towards electrification. There is no doubt that is occurring, right? There are so many mandates and initiatives coming from different countries. If you look at automotive, at Auto News, they're predicting by the time you get to 2025, I think they said that more than half of all sales of automobiles will be electrified. I mean, there's staggering numbers. You look at what Bloomberg is saying, right? It's just a fact. We're headed towards electrification overall. So there's a lot of new startups in the space. I do think there'll be consolidation along the way too. I think some players will fall out. I think we have a very compelling story when you think about what we have. We have a vehicle here that suits a very specific need. It is the most efficient tool to move a person from point A to point B in a 100-mile range and a top speed of 80 miles per hour. But it's an attainable price point that's appealing to consumers, that offers something for fleets and for utilities and commercial applications, and it can be shared, right? And so for us, I'm not too worried, because I think that we're positioned well. We've got sufficient cash in the bank right now to execute against our plan for the next 3 years. And I'm excited about where we're headed, right? And I just keep telling the investors that we're going to execute against our plan, and we're going to build credibility by doing just that, keeping our heads down and executing against our plan.
I think it's fair to say that it's early days. It's fair to say that you guys are a show me story. You have to show me, and I think you acknowledge that. And so we're going to have to just wait and see how things shake out. Paul Rivera is the CEO of ElectraMeccanica. You can see chart up on the screen. Ticker SOLO. Paul, thank you so much for joining us today on the Power Hour. And we'll talk to you again.
Thanks, Spencer. I appreciate it. Thanks so much.
All right. Next time we get you on, we'll hopefully be up in production, or at least closer to it on the U.S. side. Thanks a lot, Paul. We'll keep tabs on Solo, guys. We'll keep tabs on ElectraMeccanica as we do all the companies we have on this show and get them back on down the line. And hopefully things have progressed for them. Okay, it is 12:52. We've got about 20 minutes before our next guest at 1:15. The plan for today's show, if you're just joining us, Luke Jacobi is at the dentist. Jason is the one doing the teeth cleaning / drilling. So they are both out today. You got myself. You got producer AB. God even knows where he is right now. He doesn't respond to my Slacks. He doesn't. I don't know what he's doing right now. Supposed to be on this show, but whatever. So let's go back to the charts. Let's go to my scanner. When in doubt, always look at the Benzinga Pro scanner. See what's up, what's down. In the last few minutes, is Root going, guys? Is Root moving? Chart. Yeah, Root's starting to go. Okay. Big volume. AMC went green. I mean, I was wrong. Damn, was I wrong or was I wrong? I was very suspicious of that green candle into 10 o'clock. Very suspicious of that. Okay, I was wrong. AMC is looking good. Buy the dip for the moment is working. Yeah, WTF is right, James Adams. Nothing really makes sense, right? Nothing really makes sense. That's all. That's the best way to say it, right? Because if you look at the AMC chart, right? I mean, I just lost a bet with Dennis Dick. I was, I said AMC would hit 67 before it hit 40. I was wrong. And now I owe Dennis some donuts. But if you look at the chart, it doesn't look great. The past couple of days, this green you just, oh man. What was the low on June 10th? What was that low? 39.71. What's today's low? 38.76. Okay, so $1 below that. It doesn't look great, but buy the dip. It works until it doesn't, right? It's working today in all these things. AMC, you go to Wish. If you look at Wish from the open, right? You look at GameStop from the open. I still have to buy donuts. Yes, I have to buy that. That was the bet. The bet was I owe Dennis. I think we said a dozen donuts. I don't even remember. Well, a dozen U.S. That's like 13 Canada, right? 13 and a half, maybe. I don't even know where Dennis lives. So Dennis doesn't have a house. He's homeless. He's like renting. He's trying to build a new house right now. So I will get that. He said he would like Tim Hortons. I have to find a location nearest to him, if they even have roads up there, and I will get him some, or maybe just a gift card. I don't even know, but I do owe Dennis a dozen donuts now, which is unfortunate for me. See, Mike is watching his moving averages. Jason, I thought you were at the dentist.
The dentist canceled on me.
No. Okay.
I saw you doing a good job. I saw you in here about an hour ago, or not an hour. Well, I saw you doing like you're interviewing, and then I don't want to ruin it.
That's okay. How is Luke? Because I know Luke is having some teeth pain.
I sold more Tesla today, and that was probably dumb at 6:38. But this is a weird day in the market, I have to say, Spencer.
Isn't it weird? I agree.
Like super weird. Like, so one of the stocks that I have, GAN.
Hey, let's talk about that one for a second.
Yeah. So let's talk about that. So in Benzinga Pro, they issued upside guidance.
Yep. Here's the headline.
Yeah. Do you have it up?
Yeah, I got the headline right there. This is after the close yesterday. They raised their Q2 sales guidance to a range of $34 to $35 million versus an estimate of 23 or just under 24 million. So they raised their sales guidance for the quarter and for the year. That was out last night. Here's the chart. You can see it right there. So what'd you do?
So I sold a little bit of shares a couple of days ago. I still have the majority, but I definitely sold like 15% of the position 2 days ago, like at 15.70, because I'm like, if it goes on to 14, I'll buy more. And I was like, just trying to like be penny pound and pound foolish, whatever that saying is. So I'm a little annoyed, but I'm glad to see it's at the 1730 level. I wonder why they issued the guidance update, Spencer. Were they seeing the stock low? Is there going to be another offering? I don't see it in the future, but it was interesting timing, to say the least.
Okay.
But I still own, I don't know, 400 shares. I had 600. I sold like 25%. So the other thing that, Tesla did get some support again. The where I am taking a little bit of a hit is on like, the Generac is down 1.41%. Our power's out. I'm staying at a house that has a generator from Generac, GNRC.
Yeah.
I will not sell Generac. I don't care. This stock, when I am, I was going to say fully gray, but I already am. I'm going to own Generac. I just am. And I did make a couple other position trades. I've been trying to go a little bit more to cash. I sold my Delta today, which I still love Delta, but it just hasn't been trading the way I want it. So I want to free up cash and then be able to pound in on when I find like the next big thing. I told you I bought Eli, which isn't doing much today. ELY. It's up 1.15%, but nothing major. I just think I know that I listened to the last conference call the CEO gave, and he mentioned how they're having the best quarter ever, the best. So my concern with the Eli trade is, are expectations too high for it? I don't think they are. So I bought shares of that. I bought it in one increment so far. If it breaks the 32 level, gets below 32, I'll buy another increment. And I bought call options. My calls are January 21's, $35 or $40 strikes. That's kind of what I have going right now.
Okay. So who in chat just asked about the blind trader asked about taste. This is one this is
Yep.
Favorite of
I always say task, but maybe it goes taste, makes more sense. Taste does make more sense. I don't know why I say task. So this is Carol's Restaurant Group. I've owned that since 189.
Yeah.
I'm keeping my position on. This fluctuates a lot. I'm staying there where it's at. What did hit 610, so you are hurting a little bit. But I don't know. I think this company, stabilizing this 536. I still see months from now we're at 850 to 10. That's what I think. They're reducing debt. They're lowering the debt covenants on it. With the interest rates. And I think I don't know. I still like taste. One that I'm getting hit on today. It's a smaller stock, guys. So I don't want you guys just to go play it, but I'm getting hit on FGF today. So FGF is Kyle Seminara, who's supposed to come on my podcast. Yeah, there you got it. You got it. So
this one.
What'd you say?
I don't know this one.
Yeah. So do you know how, Spencer, I've been talking about BTN sometimes? If you pull it up, it sounds like Big Ten Network, but it's not. BTN, it's balance. Okay. Yeah. So these are both, the chairman is Kyle Seminara. He's taken OpFi public through a SPAC. Okay. And FGF has done well with lumber prices going up. So maybe lumber prices are down and that's why it's selling off. When OpFi de-SPACs, FGF will go up. I still think FGF will hit $10. I have a pretty big size position in this one, and I'm holding it because it's a mini like holding company that owns different assets, like a Berkshire Hathaway. The guy behind it, Kyle Seminara, who is friends with Warren Buffett, I'm up 62% on it. So I'm just holding on to it. I sold a little bit at 780, but I think when that OpFi de-SPACs, that thing could be at $10. I'm not selling that one. The ones I've sold, Spencer, today, and just being completely open and honest, are ones that I've gotten impatient on. I said I sold some Delta. I sold some PSTH.
I really should. What am I doing in this? I really should know this.
And since I also sold AONE.
What am I doing here?
Do you know what? If you ask me what AONE is, I don't even know. It was like some SPAC, and I have too many positions. I want to go to a more concentrated portfolio.
Hell yeah.
And you do too?
I'm always for reassessing the quantity of positions in a portfolio, whether it's too many or too little.
Yep.
Yeah, I'm always for that.
I haven't sold Win Casino. I'm down 16% on it. Everyone I talk to who's going to Vegas is loving the Win. I think they will have numbers when they report earnings. I looked in. FGF does not have high volume. FGF has low volume, so that's why, Leah. I'm not saying trade that one here. Just so we're clear. I'm just telling you one that I'm getting. So what I do is I open my account and I look. What are my biggest gainers and losers dollar wise? My biggest loser today dollar wise is FGF. That's why I mentioned it. Yeah. I'm not telling you to buy it whatsoever. It's a smaller stock and the liquidity isn't there. So if you're a big trader, please don't get into that. So I'm just telling you what I'm down the most.
I didn't realize that you owned PSTH along with me. What are we doing here, Jason?
I don't know. And I was so into it, and I'm Spencer. I'm trying to trim positions, and I know when you trim them, I'm gonna have some ones that are huge gainers. I mean, think about how bad I screwed up Big Five Sporting Network, our big, whatever that's. I bought it at 189 and sold it at 250. It's at 25. My 5,000 shares I bought at 189, I think, or 4,000 shares was $8,000. If I didn't sell that, that's $100,000. So it's not always good to trim like I'm doing, but I am.
I know.
I just feel like I have AQMS is a metals play on electric motors. I'm not selling it, but I'm just getting a little tired of it. 6, I kept saying to you guys 6 and 60, 6 and 60.
Yeah, you were saying that.
Why'd you say?
This does not look encouraging.
Yeah, the 6 and 60. Yeah, I'm down 12% on it. I mean, I'll tell you when I have losers. There was a period of time where I had no losers, literally. And 6 is a loser right now. It's down 12%. So if I had to talk, I'll look at my biggest losers. Let's do that instead. That's probably better. Okay, so I'm not including options because options are binary for me. I'll either lose 100% or have a 500% gain. But 6 is down 12%, and Win is down 15%, basically. So those are the two losers that I see in my portfolio that I'm not ready to give in. I'm not ready to throw in the towel.
Yeah. You inspired me. I'm gonna go look at my biggest losers right now. I'm sure PSTH is probably one of them because that one's a dog. I don't know. I just bought Airbnb. Timing wasn't great on that one, but let me take a look at my portfolio here. Well, what do we got today? Oh God. Okay. Yeah, a lot of cannabis is not a lot. I'm mostly in the red today, right? So
yeah,
it goes the way it goes sometimes.
And selling covered calls is a way to get some income if the stock falls. You can, own the stock or what have you. You own it anyways. Someone sold Airbnb. I think sometimes, guys, you have to take a step back and accept that. You may not know. So I still own Leslie Pool Supplies. I'm up 9%. Okay. I originally bought double the position. I had half the position left. I'm not selling it because I'm looking at 6 months from now. How is the company doing? I think it's doing fine. I think it's doing great. Penn National, it's $72. Penn National is either going to go to 85 or it's going to go to 65, guys. That's just what's going to happen. And so some of these stocks, GAN is an opportunity. Eli, I believe in. And yeah, I do believe my one that I'm down the most in today, I think will be back up. So I haven't sold, but we don't have crystal balls for the daily movement of a stock. That is what I want people to get. But you can have a crystal ball for the long-term trends on a stock. My Generac buy was in the beginning of COVID, and I bought it because people who had heart conditions, had ailments, if their power went out, what would they do? They would have to go to a hotel or go somewhere else, and they couldn't. So Generac was an easy buy in the beginning of COVID. All right, then my thesis changed because when COVID was slowed down, why would you need Generac? But then I was thinking, hey, whenever there's a storm and
we talked about this as well, Jason. Do not forget, we are just at the start of hurricane season here.
Right.
There is a seasonality. I pointed this out a couple times in the last few weeks here. The July, August, September, October trade in Generac. Not every year, but zoom out, you go back far enough. More often than not, it's hard to look into this because it's the last year was so crazy. But more often than not, in that hurricane season, there is a trade to be made. I mean, you don't have power. Joel doesn't have internet, apparently. I mean, it's like a whole. I don't know what happened over there because you guys got hit by a storm, but I'm the next town over, and I didn't get hit.
Spencer, it's crazy. The busiest street lights in my area, Telegraph and Maple, Telegraph and Long Lake are out. Like big 6-lane. I have to drive through it. I'm like, it's like
yeah.
when Tony Robbins had this thing where you run across fire on your feet. I feel like when I'm going across the road, I'm like I'm trying to avoid getting like smashed.
Yeah.
And
we live one town away from each other, but like my town, I don't even think I lost power yesterday.
Oh no, we'll be out of power until at least tomorrow, until at least tonight, they say. So we're out of power. The house I'm staying at is on a generator, like I said. So GAN, I think GAN's a fine level to get into. GAN again is a long-term thing behind the thing. I think it gets taken out. I'm reading the comments in the chat right now.
Yeah, it's possible because there aren't too many. They don't have too many competitors, right? It's like the mobile app technology, right? For gaming.
Yeah. All right, Spencer, I gotta.
Yeah. Go see how Luke's doing at the dentist, all right?
All right, Spencer, talks one sec, right? Okay, bye, guys, bye.
All right, people just call Jason on the phone, and he goes, click on us. That's okay. At least we know where we stand, right, guys?
It was probably someone from the dentist. Maybe he needed to go get over there to pick up Luke or something.
It's possible. I didn't realize Jason didn't have power either. I thought, the storm last night was pretty serious, although.
Wait, was it last? No, it was 2 nights.
It was yesterday.
There was another one yesterday.
Yeah, but it missed us though. That's what I don't understand. It hit Jason.
Missed me.
It hit Jason and Joel, but it missed me and you. I don't know what that says about the storm.
I guess we're just tactical and picking where we live.
We are so tactical. That's exactly right, AB. All right, 108. We got 7 minutes before our next guest, Adam Kaufman, the co-founder and COO of ArborCrowd. We're going to talk real estate with Adam at 1:15. Yeah, Casey, any suggestions for guests? Email shows@benzinga.com or powerhour@benzinga.com. But shows is a better email because more people are on it. So shows@benzinga with guest suggestions. We do reach out to people who you guys suggest we do. So so going back to the thing, my biggest loser of the day is ESPO. So we're down a little under 2%. Nothing too crazy, but that is my biggest loser of the day. Not in terms of dollar amount, right? Because I really have two large positions in S&P 500 and emerging market or international ETFs that account for most of my portfolio. But in terms of the other stuff, in terms of percent losses today, ESPO is my biggest loser today. So watching that, do not intend to sell, but
yeah, Spencer. I mean, this morning when we opened it, it was just a sea of red, and I didn't see any green. Now I'm starting to see some speckles of green. I mean, including in one of your biggest positions, Disney. It has turned green on the day.
Really?
And another one that I'm looking at right now that we've talked about before is Viacom CBS.
Why do you have interest in Viacom CBS? I'm just curious. Because you basically have to take January and basically take January through March and throw it out. Just cut it out of the chart.
So I believe I talked about it with Gareth from In the Money Stocks the other day, and he had mentioned this as a play that he liked. And I mentioned just from a chart standpoint. So I like when a stock's been trading sideways for a little bit, you see some consolidation. I like that as an entry point. From a fundamental standpoint, one of my theses is, with all the different streaming options you have right now, Spencer, right? You have 10 different things. You can go to Hulu, you can go to Netflix, you can go to Fubo. There's only a certain live sports is a lot more valuable than a lot of this other streaming content that's out there. Because live sports is one of the only things that people will stick around for the commercials for anymore. So advertisers are willing to pay a higher premium on advertisements for a live sporting event compared to, say a show you're watching on Hulu or, something you're just watching reruns of and you can skip the commercials. CBS has some very strong rights to live sports, including the UEFA Champions League. And yeah, I think they will be able to kind of capitalize.
Look at the long term. You know what I mean? Like, again, throw that out. Throw that out there. Throw that January through March. Get that out of there, because that was Bill Wang.
That was Archegos.
That was doing stupid stuff. That's what that was nothing. That was nothing to do with the actual company. All to do with market mechanics and Archegos being stupid and Credit Suisse being stupid. Long term trend though. I mean, look at this thing. I mean, wait, do they have a dividend? I'm
looking at it for more of a trade than anything else, Spencer. And
at least they pay you a little bit.
And Christian Gallagher in the chat's throwing out that they are a takeover target. I mean, we've seen
from who? What's their market cap? From who? 27 billion. All right, not insane, but
I mean, we've seen so many mergers in media, recently in the past 10 years that it would not surprise me if we see, one of the bigger conglomerates come in.
Who wants to buy a cable provider is my question. Not provider, a cable, a broadcast company. Who wants to buy that?
Look, Spencer, I gave you my thesis. It's built on the live sports. As Christian saying, they got NFL, they got the UEFA Champions League. Fubo sports too. That's correct. I am long Fubo. I have Fubo in my portfolio for that same reason that I am long any exposure I can get on live sports. So Disney, obviously, who owns ESPN and ABC. So those are my big 3 live sporting plays: Disney, Fubo, and Viacom. Disney actually has a stake in Fubo. So that's when I entered Fubo, is when I learned that Disney has a stake in Fubo, because Disney does control such a large portion of the live sports. But yeah, that's my thesis on there.
Great point, Mike Wisdom, that the CFO of Viacom top ticked. Wasn't it like $80 they did that offering up there? That was he top ticked that trade because they did an offering in the midst of that whole craziness. So all right, that's enough Viacom. We don't need to talk about Viacom anymore. Let's catch up in chat. We're gonna have Adam Kaufman on in like a minute or so. See, like my problem here, GB. My problem with Elliott Wave is, like, if it works for you, great. I'm not going to poo-poo it. If it works for you, that's great. It doesn't work for me, though, because I've tried to use it. It's so subjective, right? Like, you see what you want to see with Elliott Wave. If you try hard enough, you will find a way. You will always find a wave you want to find. That's I've tried to learn it. It didn't really do it for me. So that's my issue. If it works for you, GB, then that's fantastic. Then stick with it. What worked. But I don't use Elliott Wave analysis. Leia, I think you're the first person I've ever heard that says they watch Paramount Plus.
Let's go, Leia. That's good for my portfolio.
The first person I've ever. Let's ask our guest. Adam Kaufman is the co-founder and COO of ArborCrowd. Adam, do you watch Paramount Plus? Does anybody watch Paramount Plus?
I have to admit that I do not. I watch a lot of Netflix, HBO. I haven't dabbled in Paramount Plus.
That's what I thought. You see, the rest of us don't want. Nobody actually. I'm convinced nobody watches Paramount.
I don't think I could name a show on Paramount Plus. Actually,
me neither.
Star Trek.
All right,
I just got that from the chat.
Fine. All right, AB, you got us. All right, Adam Kaufman is the co-founder and CEO of ArborCrowd. Let's talk real estate investing here, Adam. First, explain ArborCrowd, what you guys do, and we'll get into the mechanics of the market. What's going on?
Yeah, so we are a commercial real estate equity crowdfunding platform. We raise money from what's called retail investors online. So think of meme stock and the whole movement that brought into play with the rise of the retail investor through accessibility, through the internet, through online platforms. That's what we do. We find multifamily, particularly workforce housing projects across America, traditionally one of the most stable asset classes to exist for a while, and essentially offer that out to the crowd for investment.
There are a number of real estate investing platforms out there, crowdfunding or otherwise. What makes ArborCrowd different than the Fundrizers of the world? That's just one I picked off the top of my head, but there are several of them out there.
Yeah. So essentially, before crowdfunding, access to commercial real estate investments was pretty difficult. You either invested in the REIT stocks, obviously subject to securities, or you had to have access to private equity funds. In when the Jobs Act was passed in 2012, it gave rise to the ability to generally solicit to the public. And you had the rise of commercial real estate crowdfunding, like other crowdfunding platforms, Kickstarter, different industries. Real estate was one of them. A lot of different, anybody could create a website and offer real estate essentially, and call themselves a crowdfunding platform. So there are hundreds that exist. A lot of them operate in a tremendous gray area, but only a few legitimate. So today, even the legitimate ones operate under very different models. So you have fund models, you have individual deal models, and then you have marketplaces. We offer individual deals to investors. We think in that model, it gives investors the greatest amount of transparency. Something that we do that's a little bit different is we actually close on those transactions prior to syndication. So it's de-risked and it's a high level of information that investors have at their fingertips to ultimately make those decisions. And we have chosen to focus exclusively on multifamily projects, bread and butter of the industry, workforce housing. Everybody in America needs a place to live, and very stable.
What is the relationship between ArborCrowd and the Arbor Realty Trust, which is a REIT?
Yeah, so we are one of the first institutionally backed and institutionally quality crowdfunding platforms out there. That's because of the synergies that exist between us and Arbor Realty Trust, the publicly traded real estate investment trust. We have shared leadership. We do operate as standalone separate companies on opposite sides of the capital structure, but we have a tremendous amount of experience and access to quality sponsorship and deals because of the synergies and relationships and shared leadership that does exist.
So ABR, Arbor Realty Trust, is a REIT that invests in real estate, and then independent of them, ArborCrowd is similar in mission, but it's making different investments and it's crowdfunding.
Yeah, so we opposite, yes and no. We operate on different sides of the capital structure. So they're a mortgage REIT. They have a large bridge lending platform, and they have Fannie and Freddie. So they have agency licenses for permanent financing. We offer equity investments. So a borrower comes to the REIT looking to close a loan, and they don't have enough equity to get there. They need an extra $3, $4, $5 million to get there to get that deal done. That's when they turn to the crowd. That was precisely why I created the company when I did, because I recognized that there was a need in the market for that capital. So we close that gap on the equity side, and oftentimes the REIT does the financing for the deal.
So where are we right now, Adam, in the real estate market? Because we've all been reading the headlines. Oh, the average median home selling, median home prices more than the average median, annual salary in some places, right? Or average income, right? So market's on fire. We know this. Great time to be in the market as a seller. Not so great if you're a buyer. How is all this shaped out on your platform?
Not only that, you also have a tremendous supply shortage right now. So that's even driving prices up tremendously. But what that's doing is strengthening our investments in that people can't afford to buy homes, so they're renting. Whether it be multifamily projects or single-family rental communities or build-to-rent communities, those are hot. Those are on fire because people are being priced out.
Adam, what is the screening process like for when you're looking at investments?
Great question.
Thank you.
We offer a very thorough screening process. A lot of our deals are with very long time and long-term industry veterans that we've had relationships with for years on the REIT side. So they have a tremendous amount of experience. Then we have a proprietary model and underwriting approach to how we look and analyze deals. And then we have a tremendous amount of experience amongst our leadership to make the final decision in an investment committee. So there's a lot that goes into it. We have that proprietary method, but most importantly, we have experienced sponsors, experienced partners that we're working with.
Who is this for, Adam?
So this is for the accredited investor, somebody who makes $200,000 or more a year, 300 combined, $1 million outside of their home of net worth. And essentially our minimums were $25,000 at the start, depending on the deal and how much capital raising we're doing at a time. That minimum can fluctuate. But it's somebody who has, significant income coming in, but wants to take their portfolio into their own hands and wants, direct access to specific deals.
would you consider opening up to non-accredited investors in the future? Is that on the table?
We've thought about it, and I think a lot of the industry had gone there, especially in 2013 when the Reg A Plus model had gotten very popular. I'll let you in on a little insider information in that it's incredibly expensive to acquire investors. And the amount that you have to put into acquiring somebody who is going to invest $1,000 versus somebody who's going to invest $25,000 is virtually the same. So you have to be smart and understand your costs and recognize that at the end of the day, if an investment goes south, which a lot do on these platforms, so it's incredibly important to know who you're partnering with because of the lack of experience that exists out there. Who's going to really come after you with a class action lawsuit? It's going to be that true retail investor who has no experience and probably has not much else in their portfolio making an investment because they saw an online ad that you targeted them through.
Yeah.
Go ahead, Aaron.
I just had one final quick question, Spencer. So Adam, you mentioned that it's mainly, multifamily residential real estate. Have there been any discussions of getting into other sorts of commercial real estate, such as, office space or maybe even, retirement living, senior living?
There has not been actually. A little bit. I mean, there's some senior living stuff that comes across my desk, but not. We haven't dabbled. I think the main thing really comes down to the fact that we know our expertise, right? And we recognize that our expertise is in multifamily. We're thankful for that. We've chosen that because it's also the bread and butter of the industry and tends to, act as one of the stronger or more stable performers when things go wrong in the economy. So, that's our experience. That's our expertise. A lot of these platforms out there that are trying to be experts in everything and have formed their companies in the past 4 or 5 years, it's impossible. It's impossible. So you really got to screen and be cautious.
So you're sticking to the bread and butter. Got it.
Yep.
And then one more from our chat here, as far as what are the tax implications of investing with you guys?
Yeah, so you have the same tax implications that you have with traditional real estate investments. Yeah. And I think people just need to understand it. They need to go to their accountants, make sure they're doing it the right way. And basically on their tax returns, we don't give tax advice. We're very careful about that. On their tax returns, they make sure they do the right thing.
All right, Adam Kaufman has been on with us. He is the co-founder and COO of ArborCrowd, crowdfunding real estate. Maybe just one more before we let you go. What are your overall thoughts on the real estate market right now, just in terms of like the investment market, right? The public side, the capital markets, right? REITs, and that such. I mean, you can take that to interpret residential or commercial or whatever. But like, what are your overall thoughts on the real estate sector right now?
The market's super hot. There's a lot of capital on the sidelines. Interest rates are low, so it's very active.
Where's all the money on the sidelines coming from?
Yeah, it's true. Listen, I think even with COVID, what happened, right? It wasn't a real true recession the way people thought it was going to be. There was a lot of money pumped into the economy, so there's a lot of money there to be invested. There's a lot of institutional capital, a shortage of supply. Costs have gone up, although I think that will normalize in the very near future. As people get back to work, you'll get people back working on building projects, operating them, which will be tremendous. And we're at the top. We're at the top of the market. There's a lot of competition, and people just need to select wisely.
All right, Adam Kaufman, co-founder and CEO of ArborCrowd. Thanks a lot, Adam.
Thanks for having me.
All right, it is 1:25. We went an extra 25 minutes today on the Power Hour. We don't have any live show planned until 2 with our crypto show. So, AB, you want to just hang out?
Yeah, let's do it.
We can just hang out, talk whatever, talk to the chat, bring out some charts. Let's bring my pro. Where's my pro? I lost my pro for a second. Let's get pro back up on the screen. There it is. Charts are back working in pro. It's a good day. The charts are back working. The market's coming back.
What about people that want to play some vaccine plays with more raised concern around the Delta virus? People saying, "Oh, I'm going to go buy Moderna. Or I'm going to go buy Pfizer because we have all this." Maybe some people are out there that weren't planning on getting the vaccine, but now they might be worried about the Delta and go get it. I don't know if that demographic even exists, honestly, but it seems like some people are talking about a renewed vaccine play.
I mean, I just pulled up the main three, Moderna, Pfizer, and BioNTech, and really you can get Pfizer out of here, because the problem with the companies like Pfizer and J&J and AstraZeneca is this vaccine, this COVID vaccine is but one small part of their overall business, right? Moderna and BioNTech are I don't want to call them one-trick ponies, but this COVID vaccine is a lot bigger part of their business. So let's just compare those two in the last few months, see how they've performed. They've both outperformed the market, frankly. They've both been crushing it this year. The question has always been, can they translate these vaccines into other, translate the technology behind this vaccine into other vaccines? Your question, Aaron, about the Delta variant increase and concerns. I don't know. I mean, for everything I've read is, and Frank said earlier on the show as well, the vaccines do work against the variants. I don't know and that's why Dennis was so skeptical this morning of like why the market was down. Oh, because there was a state of emergency in Japan and because the Delta variant is getting worse and whatever.
Well, we actually have a higher vaccination rate than Japan and some other countries, surprisingly, honestly, to me. But
I don't know. My point was, I don't know if there are any catalysts left to be had on the COVID vaccine front. I think that catalyst may have been played out. If you're looking for Moderna and BioNTech or Pfizer, whatever, to go higher, I just don't know. It might take something else now, is what I think.
I hear you. Yeah, and I've seen some different kind of data coming out about the efficacy against the Delta variant. I saw something, I think it was out of Japan, that with the Pfizer vaccine, it was, say 65% effective, but then Pfizer themselves said it's highly effective. So I guess time will tell to see which vaccines are more effective against the Delta variant. Hurt Scrambler in the chat's asking AB, how low is TME going to go? I believe that's 10 cent.
10 cent, 10 cent music, not 10 cent. Big difference.
Okay.
Oh, no.
10 cent music. So it's not owned by the same 10 cent in China.
Well, they have a stake. But
okay. Let's see, Hurt Scrambler. I mean, I see it below already.
Is this an all-time low? It is not.
No, it's not an all-time low, but it's lower than a lot of previous support levels over the past couple of years. So to me, that's a very bearish sign that it's blown through past support levels. Zoli in the chat saying 0.0. I don't think it'll get that low.
This freaks me out. This is like, I own PSTH, which is merging with Universal Music Group, which is a record label, and not quite the same business as TME, but similar, right? And this freaks me out right now.
I'm gonna go 850. Hurt Scrambler. It's gonna go down to 850, then bounce.
Where'd you get that from?
If you go back to that go back to that level, June 20, before June, keep going back a little bit, back further. Yeah, April. No, keep going back a little bit, right there, right around there. That's where I think it is.
COVID lows?
Yeah.
Jesus.
And then we'll see it bounce from there. Hurt's saying he likes ABT. Which one's ABT again? Remind me.
Oh, Abbott Labs?
Oh, as a vaccine play, he's saying.
We haven't looked at Abbott Labs. Is Abbott a vaccine? That's not a vaccine play.
I thought they were like
it's huge.
A medicine, like they produce. No?
Abbott's huge. They're not like, I don't know.
Okay, maybe it makes up a very small portion of their business, but that's what I thought they did. I thought they were like a medical laboratory producer. Either way, I think this is a very strong company. I actually have Abbott in my long-term portfolio.
You have Abbott and you didn't know what the ticker was?
I don't pay attention to my long-term portfolio.
Attaboy.
I just buy the good companies and let them sit there.
That's it. That's what you got to do, right?
All right. How about game, maybe? I like this game. All right. Go back to the game. I'll tell you where it's going. And reminder, this information is not to be used as investment or trading advice.
Oh my God. Wait a minute. Oh my God. It gave it all back. It went red. Oh, man.
Yeah. So this is another one we see below previous support levels.
Oh.
Yeah, I'm not bullish on GAM, not yet. So
I don't understand. Like, I didn't quite get why it went higher. It went higher because they sued DraftKings. So what?
So, Dom, on a chart like this where I see a continued downtrend like that, I like to either see a sustained bottom, so it hold a level, like trade sideways for a month or so, or I like to wait for an uptrend to tick back up, a curl back up before getting in. I don't try to catch any bottoms. I don't enter until I see either that consolidation or a trend upward. I'm not looking to time it perfectly and get the very bottom before it shoots back upwards. So yeah. And look, we got in the chat some more color on Abbott. Abbott produces a self-test Binax available at all drugstores. So it has some COVID thing, Spencer.
Okay.
Cannot hear you. I hope that's not, you can hear me, right, Spencer?
Yeah.
All right.
No. All right. So Game filed a patent infringement case against DraftKings. I didn't quite understand why that was worth $4 after hours, but apparently it was, or $3, excuse me. Regardless, it just went red. So look, my general rule of thumb, and this doesn't always apply, but it general. If you pop after hours and you give back those gains the very next day, not a good sign. You can't even hold those gains for one day, right? They can hold the gains for one day.
And what's the market cap of this company, Spencer?
Tiny.
Yeah, I mean, I don't like it right now. I mean, if you're looking at it for a trade, I would say wait till we see, either that little bit of a consolidation or a trend back upward. It doesn't seem like a good time to get into the company right now, nor would I want to hold this long term. But yeah, I think there's lots of interesting plays out there, Spencer, especially given the price movement lately. I've been saying it all week, and I've kind of been wrong on it all week about. Oh, I haven't been wrong. I've just been saying a lot of these Chinese stocks are on sale, but they've been continuing to be on a greater discount sale. So names like Baba, Neo are continuing to trade lower today. And I'll keep saying it. I mean, I think if
look, what's the saying? The time to buy is when the blood is in the streets, even if the blood is your own. The streets are bloody.
I mean, trust me, Spencer. You don't need to remind me. But this is one that I think if you buy Baba right here at 199 and you just don't look at it, don't touch it, here in a year, 2 years, 5 years, you can say, wow, I can't believe I was able to get Baba under $200.
The thing though is like there are so many stocks that look like this chart, meaning in late summer or fall of 2020 or the winter 2020 in the early first few months of 2021. So every stock under the sun just was ripping higher to new highs, even if these stocks had done nothing for years. And so you get this sort of, all these charts look identical where they all topped out in like December, January, February. Like in this case, it was actually a little earlier. In this case, it was October, right? Anytime in the fall of 2020 or the winter 21, all these things topped out. Even if it was a stock that did nothing for years, right? Alibaba was a slow mover for years, right? Didn't really do a whole lot. And so you get a lot of people that bought up here, that chased up here, that if they didn't sell now, I mean, they're underwater. And I just let's not forget the fact, just because it went above 300 a few months ago, let's not forget the fact that Alibaba was not exactly a big mover for going back 3-4 years now, right? This is quiet.
Christian's in the chat saying he bought more Baba today. Not sure if it was a good idea or not. Christian, time will tell. I say if you don't touch it, could it go down to 180? Sure. Could it go down to 160? Maybe. Do I think it'll be higher than 200 here a year from now, 2 years from now? Yes, I do.
I think people think because it went to 300, late last year, it's going to go back there eventually. It doesn't have to, right? Baba's stodgy. Right, look, this is a weekly chart going back to Baba's IPO, right? If you look from 2018 to last year, Baba's stodgy, right? Doesn't move a whole lot, range bound, kind of like Tesla for that matter. I mean, the split kind of messes with the chart there, but if you go back like pre, 2020, like look how range bound Tesla was for years, right?
Yeah, I mean. Do you see them barcoding, just going up, going down, staying in that range? For me, Spencer, I'm not like a purely technical trader. I do like having some things on a chart, like I mentioned, seeing some consolidation. I like investing in stocks that are in a, sustained uptrend. But there needs to be a thesis too. So with Tesla, like if I was looking back on it back in 2018 or whatever, even if it's range bound, I'd be getting in it for the long-term thesis that, hey, this company has, the ability to potentially shape not only the future of vehicles, but also some other energy aspects. And yeah, so I think you got to take into account both. I think you got to take into account the fundamentals of the business. What is the story? What is the company trying to do? And also, let's look at the chart. Let's see what the charts are looking like.
For Baba? I mean, I just had it up for a while.
No, I was just saying in general. Like I like to look at both. Like because you can look at just purely the technicals of Tesla and have said, oh, it's bar coding, it's in a range, it's not going anywhere, and missed out on an investment because you weren't looking at the long-term potential of the company. And likewise, you can be looking at the fundamentals of a company, the thesis, and not pay attention to what the chart is doing and get in at a very bad time. So I think, we have a tendency to want to categorize traders as either a technical trader or a fundamental trader. But I think the best way to do it is to take a little bit from both.
Yeah, I generally agree with that. I've got my movers here up, my scanner tool up in Benzinga Pro, just keeping an eye on what's moving. And I'm sorting this by the last half hour. I'm curious, hey, what's up with Biogen today? Why is Biogen, let's see, Biogen announces FDA approval of updated Aduhelm prescribing information. FDA narrows the label to recommend use of Biogen's Aduhelm in mild Alzheimer's patients. So they got some good news from the FDA today. That must be why Biogen is having a very good day, up 3%. There is a chart. Let's go to a daily. You can see it. Oh, man. Okay. Wow. Let's look at this. So what's the 50% retracement of this? So call it 270 to 468, right? So
that's where you think it's heading back down to 468?
No. I'm just trying to get the 50% would be 369. The midway point of this range is 369. We are at 366 right now. The whole idea behind that number, that 369 number, is that if a stock comes, if it's dropped a long ways and comes back above that, then it might regain the rest of the top of the range, and vice versa for falling below that, right? So in this case, it fell below the midpoint of this range. It's trying to get back there. That number would be like an interesting, like, psychological level, right? 369, because it's right in the midpoint of the range from when that crazy Alzheimer's move happened, right? So 369 psychological number for me. We're looking good today. What's that gap? What was the low of that gap? The close was 371. All right, there's your next level, right? 369 and 371. If we can get above there, then yeah, why shouldn't we go back to 400 in Biogen? Why shouldn't
Mike Wisdom in the chat saying Jim Chanos has always said that Baba's accounting is crooked. Look, Jim Chanos has been shorting Tesla for, 5+ years. He's lost a lot of money on it. He's a great investor. But these guys aren't right 100% of the time. And who knows? Maybe Baba's accounting is a little messed up. We'll see. I still think they're a behemoth of a company that will continue to grow. Obviously the biggest concern for me there as an investor is what will happen with the Chinese government. Are they going to continue to crack down on kind of some of their big companies like Baba and Ant Group?
Can we look at Beyond Meat for a second? I saw a headline today.
Yeah, they put a teaser out about a new type of meat or, pseudo meat they're putting out. Did they announce what it was?
Tendies? Chicken tendies?
Oh, is that what it was?
Yeah, Beyond Meat tendies.
So they put out the little like hangman thing. Did you see that?
No.
They put out like a thing with 6 spaces for letters, and you had to guess what it was. And some people were thinking lobster. Some people were guessing hot dog. But I guess it was chicken.
Or I think it was tenders. Maybe.
Tenders.
Anyway, where's that Beyond Meat chart? Man, talk about quiet. This thing was everyone's favorite. Oh, man, let's zoom out.
Yeah, talking about trading in a range. Look at that range, Spencer.
Yeah. Man, this chart's funky. I mean, I think the waves are getting smaller, right? But man, this chart is fun.
Yeah, I think this is one that got a little too expensive, as a lot of good growth stocks got at one point, especially, you know, after the COVID crash and people rushed to the stock market to buy it. I mean, you saw Beyond Meat. I mean, look back in last year, like where we were this time last year. It was at what, Spencer? $200 if you go back up there? 220
This time a year ago?
Yeah, no.
Well, so what's July there? We were right here.
Or no, sorry. I guess I'm looking 2 years back then.
What, that was after the IPO? Yeah,
okay.
It was like 250.
Yeah, and I mean, we see this with a lot of growth stocks that might get a little too expensive. I mean, the PE just goes off the charts. Then growth stocks, because they grow faster than traditional value stocks, they will come down faster as well. And we've seen some very big downward movements with this stock. So don't trade this if you don't like volatility. If you want a volatile stock to trade a little bit, this could be the stock for you. If you want a stock that you don't really have to watch and check on every day, maybe stay away from it.
I'm responding to Christian Gallagher in the chat. I'm guessing my number. By the way, did we ever connect with Jason W? I think we did. Who won our chat challenge? You want to do another chat challenge today, Aaron Bree?
Yeah. Let's do it. I do. If you can hang out a sec for a second, I do have to run to the bathroom real quick.
All right, fine. Go do that.
All right. I'll set up the chat challenge though before I come back.
All right. AB is gonna set up a chat challenge. Here's what we're gonna do, guys. Same thing as well, what's today? Thursday. All right. Let's do it like this. We're gonna measure from the close today to the close end of next week. Right, today through the end of next Friday. That's going to be the chat challenge. Okay, so we got 6 days of trading. And we're going to put a link in the chat when Aaron Bree gets back, and everyone can make their guess as to what is going to be the best performing stock on a percentage gain basis. Percentage gain basis, not dollar basis or whatever, just percentage gain. Biggest winner from today's close until next Friday's close, right? Next Friday, what's that? July 16th, right? Winner will get some free swag. We did this last week, and I almost won. I almost won with my legal Zoom, but Jason got me. Jason W got me with, let's zoom in. Jason got me with that donut. He got me. But we'll do that. What did the winner win last week? The winner won a shirt, and I think there was one other thing that we sent Jason W. I have it in my email somewhere. A shirt and something else. It may have been, or you can just, here, this is what we'll do, right? If you want to get ahead of yourself, right? We'll pull up the swag store. We can all agree right now what the winner will win. All right. Here's our Benzinga swag store. You can pick what you want. If you're the winner, how about that? Pick what you want. You want a baby onesie? Yeah, get a baby onesie, right? You want a shirt? You want a mug, a hat? We got a ton of stuff here. You want some Spax Attack swag, some Moon or Bust swag, some pre-market prep swag, right? It'll be something. You want some socks? You want some Benzinga socks, guys? Maybe? Nah, not a fan of the Benzinga socks. We have hoodies, we have shirts, we have hats, we have mugs. We have baby onesies. Check it out. This is swag.benzinga.com, by the way. Swag.benzinga.com. Winner will get some free swag of your choosing. Does the onesie come in a size 34? I really don't think so, Dr. Sky Jones. I really don't think so. Yeah, WK. I also want that shirt. I guess we can make a shirt that Marcus had on. All right, AB is back. No, we don't have diapers. Money Channel, we do not have diapers. AB's back. Here's what he's going to do. He's going to make a spreadsheet. AB, what we screwed up last time is we I don't know how you want to do this because we have to make it public, right?
Yeah, what did we screw up last time? I don't believe that.
Well, we didn't put a way for us to contact them, right?
Okay. Well, yeah. Okay. So I'm going to make it public this time. But some people might not want their email address out there.
I know. Okay. So this is what we're going to do, guys. We're just going to do the same thing we did last week, and we're going to make a public spreadsheet, and we're going to rely on you to be a nice person and not screw with the spreadsheet. And then just remember, if you enter, remember next Friday when this is going to end to just check up. Tune into the Power Hour. No, not Power Hour.
Oh, wait, no, this is the Power Hour. Wait, are we doing another just pick the best performer over the week?
That's what I thought, unless you had another idea.
I mean, we could mix it up, but we could. I think that's a good idea.
Yes, James, you can pick an ETF. Oh no, yeah, you can
pick a leveraged one.
Yeah, no, not a leveraged one. No leverage ETFs. None of that. Get at those are designed to move higher and lower faster than the rest of the market. Okay, so no leverage ETF. Nothing crazy exotic. No freaking, I don't know, inverse VIX, whatever BS. Stocks, ETFs. Okay. Stocks and basic non-leverage ETFs, and that's what we'll do. And AB, I said this is going to go from the close today to the close next Friday. So what that means is we're going to have to we can only reveal the winner on the 19th, right? Monday the 19th. So we'll just make a note on the Power Hour on Monday the 19th to reveal the winner. And if you enter the contest, be in the show so we can contact you if you won.
Spencer, I'm one step ahead of you. Putting the link in the chat. I already had the exact thing, as you said, closing price today. Because if we did opening price today, it'd be a little unfair, right? Because you can pick a stock that's already been up 5% today from the open.
Obviously.
All right, so I just threw that link in there from the Benzinga account. You should see that comment in a second. Here it is. Join it. Throw your name in there in the first column. Your stock in the second column.
Wait. Can you message me the spreadsheet so I can open it on my computer?
I can do that.
You know what? Forget it. I'll actually go this way.
Oh, you know what? I already did.
Done.
All
right. All right. Let's open the spreadsheet up. It's a public spreadsheet. Yeah. Obviously put your name. So here, I'll bring it up on the screen. Here we go.
What ArborCrowd Gaming? What was your? I feel like he's had this picture for a while. And he might have had a different name before ArborCrowd Gaming. Remind me what it was. It's going to bother me.
I don't know. All right.
Man in a good suit can achieve anything. If you have any good tailors, you want to buy me a nice suit up here in Detroit, let me know. I'll do it for y'all.
Okay. I haven't figured out what I'm going to pick yet, but I will be entering this contest, and I'm going to try to win again.
You didn't win last time.
I came in second, Aaron.
That's not winning.
I know. I almost won is what I said.
No, you didn't.
I almost won. Maybe I'll do another IPO like last time.
What? Speaking of, what are some big IPOs we have coming up? Maybe not anymore this week, but next week.
I don't actually know. Matt Hammond, if you're around, hook me up with some knowledge. Hook us up with some knowledge. I don't actually know who's on the calendar next week. We'll have Matt Hammond on the show on Monday. How about that? And but I don't know. It's summer. It's quiet.
I'm gonna find a big time gainer, not to help my portfolio, just to win this challenge. I'm looking for like maybe a little 50% gain over a week. That's gonna be my goal.
50%. The winner last week was like 19%.
Hey man, shoot for the stars.
Yeah. There was like 3 people. Like of all the people that entered the challenge last week, only 3 of us were actually like green. Our stocks went up. Okay, so
we're
seeing Sarepta, Clove, Manny really going for it with Clove. Good luck with that one. I'm seeing Lemonade. I'm seeing Bingo. Happy's got that all too simple. That old
Tom, your deadline. Tom's asking when is the deadline. Your deadline is by close today.
Oh, I was going to say when the show ends at 2:00. All
right, fine.
9 minutes.
We'll do that.
But how are we going to know? I mean, we can see revisions.
I can also make it not editable after a certain point.
True. Okay. So the deadline, we're going to do that. All right. If the deadline's at 2, then then you and I got to get going. All right. What am I going to do for this contest? I got to think for a second.
When the show ends, Vintage is saying, all right, Vintage, you're the boss.
All
Let's do it.
right, Vintage is the boss. When the show ends, oh God, that means I got to think for a minute. Oh God.
And Johnny Black, I see you in the chat saying like you never got your Alfie hat. All right, public service announcement.
Yeah.
Okay, that's right. It was Dan P. Dan P was always in the chat with this little picture, and now it's okay. Anyway, back to the public service announcement.
Yep.
There have been times where a member from Zinger Nation has been promised swag from Benzinga and something happened, not on our end, but with one of the various shipping things that we uses, and you might have not gotten your swag. If that has happened, let me know. We'll check our records. We'll get you our swag. But regarding the Alfie hat, I sent all that info over to the company. What they do with that is up to them. So I've heard that a lot recently, that people were promised an Alfie hat and haven't gotten it yet. That's not on me, is all I'm saying.
Okay. Is there anything we can do to help people get their hat or no?
I mean, I can follow up with the company, but the thing is like I don't want to be, just be like, oh, by the way, like some of our fans are complaining they haven't gotten your swag yet, because it was like a nice thing to offer in the first place. But I do wonder if that ever got shipped out by the company or not, or maybe they're just getting the best hats ever in the world for Zinger Nation, and they take a while to produce.
I don't know all right, we got 7 minutes here, AB, to pick a stock to outperform one stock to rule them all for the next week. Oh God. All right. Let me look at what's that ticker? No. I don't know, man. I'm sort of stumped here. I'm gonna put myself in here. I'm sort of stumped. PSTH, Tiny Pie, get out of here. Okay. Bless you.
Thank you.
God. Do we have any repeat? Okay, Johnny went with the Qs. Okay, bold choice, Johnny.
That is bold. I might go with SQQQ. Just kidding. I can't. It's leveraged.
Johnny, you're probably not going to win with the Qs because broad-based ETF. The odds of a broad-based ETF like that outperforming an individual stock. Master of Stock going ARKK. I don't hate that pick, actually.
ARKK? I don't know.
Oh, man. You know what? I was also thinking of AMD with Jorge. Jorge went with AMD. I was also thinking about AMD. Jorge already took it. I don't know if I'll,
All right, I'm in. I'm locked in.
You're locked in?
I'm locked in.
What the hell is LU? What is LU?
It's my pick.
What is that? I don't even know what that is.
Lufax Holding Limited.
What the hell is that?
It's a Chinese company.
Okay, what do they do?
Great question.
You don't even know? All right.
It's like a personal finance. It's like a fintech type deal.
Okay. All right.
Down 16% today.
Oh man, I'm on the struggle bus here. I got 5 minutes. I'm on the struggle bus hard. By the way, guys, the crypto show is coming up next.
Yeah, real interesting interview. So the crypto show has Daymac on, which is a Canadian company that is producing electric vehicles that can actually mine cryptocurrencies while the vehicles are parked. So, you have one of their vehicles, you park it in your house, and it's actively mining Bitcoin, Ethereum, even Dogecoin. Whatever crypto you want to mine, the car will do it. Well, actually, I don't know if I can say car. It's like one of those little hybrid 3-wheel ones, similar to what FUV has.
I'm deep in thought right now.
Oh, Casey's saying you should pick GME or AMC.
Oh, actually, you know who I'm going to pick? Did anyone pick it yet? No one picked it. All right, you know what I'm going to pick?
Oh, someone picked Didi.
All right, I'm locked in. Ace.
All right. I don't hate it.
Locked in with Space. Please have a successful flight. Please have a successful flight. I'm locked in. Virgin Galactic.
I don't hate it.
So
I don't see a lot of like the standard, I don't see a lot of AMCs, GameStops, Teslas.
AB, can you know what I'll do? Never mind. Let's put the link back in the chat. Well, if you missed it, do the chat challenge for the power hour for this week. These picks are going to be, we're going to measure as of today's close through the close of next Friday. Best performing stock gets some Benzinga swag for free. There's the link in the chat. Please Please, guys, Virgin Galactic, have a successful flight. Okay, we've got Zillow. I like that one, Jeff. I see First Solar, HGen.
I see Sundial, BNGO, Bio Nano Genomics.
Wow. Mumtaz, you picked Newegg. That is a bold choice.
Bold strategy, Cotton. We'll see if it plays off.
I think Mumtaz will either finish in first or last. We'll see.
Spencer, you want to know? I'll let you in on my seat.
Wait,
on how I picked my stock.
Dr. Scotty Jones, this is a public link. Anyone who has the link should be able to just click on it and open it. Yeah, I'm on the hook if Branson doesn't make that alive. Wait, Dr. Scotty, he can't seem to download. You don't have to download anything. It should be just an open public link.
I think he's on his phone, and you have to download the Sheets app to edit it from your phone.
Thanks.
If I had to guess. Speculation. But yeah, Spencer, here, let me give you a little insight to how I picked my stock.
Wait, also, you know what we should do? I don't think we put the link in the other chats. One more time. If you're on Twitch, if you're on Twitter, if you're on YouTube, there's the link. Okay.
Can someone enter Sensonomics under Scott? Yeah, I got you. I'll do that. I'll do that for you.
Sens?
Sens. Ticker SENS.
I didn't even see you, Master. Master of Song suggested I pick Space. I didn't even see that. So we're on the same page there.
Sure, you didn't.
No, I didn't. I thought of that myself. Anyway, okay. We're gonna cut this off in 2 minutes, and then the crypto show is gonna go live. So, anything else we didn't cover today? I mean, this is fun hanging out. I think we should do this more often. Just kind of hanging out with you guys and talking about whatever happens. I'm looking at a movers tool over the last half hour. PAGS at the top of my filter, my up filter, and UONE at the top of my down filter.
I think we have more entries this week than last week. All right, y'all. We do only have a couple minutes. Smash that like for Power Hour. We've had an interesting show today with Luke at the office, but we had packed guests. If you are just joining us now, you can go back to the beginning of the show, watch Frank Curzio, who is the sponsor of today's episode. After Frank, we had Dave Mazza, head of product on from Direction. And then after that, we had CEO Paul Rivera of ElectraMeccanica, ticker SOLO, Solo. And then Adam from Arbor Group.
ArborCrowd.
ArborCrowd, a crowdfunding commercial real estate. Interesting. I will say I was a little disappointed to learn that I was priced out by not being an accredited investor. Well,
they did lower the threshold last year. It's easier to become accredited now than.
So did you hear what he said? He said you still have to make $200K a year.
No. He was saying.
Oh, for their company, they have a.
No. He was saying that's what you have to be an accredited investor, but they lowered the bar last year to be accredited. It's not as hard as it used to be. He wasn't that. Those are the broad-based accredited investor rules, but there are a couple of exceptions, I think. So anyway, all right, that'll be a wrap for us, guys. Hope you had some fun. Drop us a like. We'd appreciate that for hanging out with us. If you haven't already, please subscribe to Benzinga on YouTube. We are at yesterday we were at 112,000 subs on the button. I think we're probably closer to 113 now. But subscribe to Benzinga on YouTube. You want a free trial of Benzinga Pro? Go to pro.benzinga.com. Somebody asked earlier what the discount code was for Benzinga Pro. There was always the YouTube 20 code that gets you 20% off. That's the one that I know of. You can always email onboarding@benzinga.com if you have questions, comments, or concerns. But pro.benzinga.com is your link. And AB just made the link, the Google Sheet private, I think.
I made it view only, so you can still look at it. You cannot edit it. If for whatever reason you didn't get your pick in.
Tough. Next time.
Tough luck. Yeah, we'll do it next time. But yeah, have a great week. Oh, I was going to say weekend. Tomorrow's Friday. We still have another day. But we will not be here tomorrow.
Yes. If you missed my PSA earlier on the show, no Power Hour tomorrow, no SPACs tomorrow, no Get Technical tomorrow. We've got our quarterly meeting from 10 to or from 11 to 2. So we're going to be doing some other stuff during that window. But no, tomorrow's going to be a weird day. So anyway, Power Hour, we'll be back on Monday. Hopefully Luke is back from the dentist by then. Aaron Bree, I'll see you. Benzinga Crypto Show coming up right now, I think. Yeah.
Boom. Stick
Boom.
around for the crypto show. We're going live there. Peace
it.
and love, y'all. See ya.
All right.